Hi, everybody. This is Gary Dean, and this is our nightly video report for Wednesday, December 28th, 2016. Everybody was holding their breath for that 20,000 to hit. I've been saying momentum and just that overall number of 20,000 was on, in the seasonality wise, was on the side of the bulls. And that would be, that would make sense if it went higher. But I also said that the bearish divergences and very overbought conditions and going a little too far too fast was a reason why we could see the indexes go lower. So when you have, something that kind of cancels it out, you just kind of stay on the sideline because I don't like taking guesses on what could have happened. They could have, they could have blown the Dow through to 20,000 today. And, that unless you're just trading this market, it wasn't really worth, putting too much of a trade in place just because, there's not going to be a lot of volume and a lot of volatility, even though today we did see volatility. But it's just something that I like to stay away from. I will promise you that volatility is coming down the road. I do believe that we're going to see these indexes at higher levels, but they're also going to come with massive moves in both directions. And it's going to be something that we were not used to because typically what's happened in the past is, we get that one decline and then from there they spend the rest of the year grinding higher. These are going to be some pretty drastic moves in both directions. So there's going to be money to be made, and it's just going to be really positioning and being patient with, setting up your trades because you don't have to be in every one of the trades. As a matter of fact, you lose more than you win when when you get into too many trades because A, you're paying commissions, and B, you're going to get on the wrong side of a trade. And it's, but if you can position yourself into, 4 or 5 big moves, then you do pretty well. And that's, what I'm trying to wait patiently, to set up the next trade. So we saw the S&P down, almost 19 today. Broke back, below this wedge here. If it continues lower, you really want to keep an eye. As far as price support, we're pretty much right here, and that's just going from where the previous low was, right here. So we have some support, but if it breaks through that, then we're starting to look at, as far as price support, a move all the way down to the 2112 area. So that would be the price support. But if we take a look at the price oscillator, we don't have any bearish divergences, so I'm not sure if it's going to come all the way down there. Could it? Yeah, but if it finds some support somewhere here and then it heads up, what that's going to do is set up the bearish divergences, and that's pretty much what we've seen on a daily basis before we've seen any larger drops. 60-minute chart, now that's something that's totally different because we have the bearish divergences in place. Here was this, the support level. It broke through that, so that automatically brings the next support level at the 2248. So this will be the, we're at levels right now that we got to watch, and if they lose that, that's when, we start looking at that 2212, 2218 level that I was just mentioning on the daily, which is the price support. But we also have the, a 23% retracement is 2231, and we also have the 200-day moving average on the 60-day. That's at the 2229. So if we head lower and break through this support right here, these would be the next target areas. If they go a little bit lower and kind of hold, from there, move up, because we've seen that happen a lot. Like here's an example where this was support right here. We broke through it, and then from there they rallied higher. So they do that a lot where they'll take something out only to shoot it higher. But right now, we're looking anywhere at this 2247 is the area you want to keep an eye on. And again, if they start to lose that with momentum, that's when you start looking at these levels. Now, if we get down there and it holds, then that's where, we'd probably be looking for the next move higher to get possibly to the 2300. And again, that will set up the bearish divergences on the daily chart. So even though something's always happening in the market, it does seem boring sometimes, even though today there was volatility. But it's also setting up for, the next larger move. And The daily is saying to expect a move above these highs at some point once it finds support. The 60-minute, you can see that we're getting close. We're not really. I mean, this is the midline right here, so it has some room to get into into completely oversold levels, but we're getting close. Here's the from the previous drop. You can see the momentum made it down to the -1, so it has a little bit more room to go to get into there. But we don't have any bullish divergences in place, and we're riding off of these bearish divergences. So if it holds, yeah, you know what, I wouldn't fight it. And if you want to take a long trade, take that and then just put your stop here. If it heads lower, keep an eye on the 2231, 2230 area. Possibly take a long trade and put your stop, say below this support, or layer in on it. That would work as well. But the one dangerous part about that is just that we have all these open gaps below it. So, as much as I'm saying I believe that we're heading higher, things are still dangerous, even though we had a pretty good drop today. So just keep that in mind. But like I said, I still, it wouldn't surprise me if they hold support in this area, or say drop it a little more, but then head higher. Either within, by Thursday, Friday, or maybe they just wait until 2017 to give it a go. And, January's for the past couple of years have not been too bullish. Maybe this year changes that. We just have to keep an eye on things. But the one thing that just to keep in the back of your head is the size of this move that we've seen without any real pullback. So, I would, again, think that we're heading higher, look to buy dips, and then if momentum really picks up on the downside, then, we have a lot of target areas below that I believe we could head in. On the 15-minute chart here, you can see that we have some bullish divergences as the price oscillator started moving up and the S&P was moving down. Again, this is your price support right in this area here. If they lose that, then we want to keep an eye on that 2242 area, 2231. So that's really about all I have. I wasn't really expecting this size of a move to the downside. I thought it was going to be kind of dull, but we got it. Now we have to see how the bulls react to it. And again, I still wouldn't be looking to make any huge trades until everybody's back from the holidays and the new year starts, because we want to be positioned correctly for the next larger move, and there's going to be some big ones along the way. So with that, have a great night, and I'll talk to you guys tomorrow.